official good morning and welcome from ABC. Most of you know me, but I'm Megan Greenland, and it's nice to see some of you virtually, and but happy to have all of you here and with us today to learn about what I'm gathering to be a little bit of a confusing topic that is rapidly changing, and but thankful to have some experts here today to discuss it with us. So we do have a speaker that's going to talk the majority of the time. But please, if you have any questions throughout the presentation, feel free to use the chat box. I'll kind of be monitoring that, and we'll ask the questions out loud whenever they come up, or if the flow is going really well, we might wait until the end to answer a few of them. And then if you have any follow-up questions after this event, feel free to send them to me. I'm happy to connect you with the fine ladies that are helping us with this presentation today, who I'll introduce in just a second. But otherwise, just know that this meeting is being recorded. So if you had coworkers or anybody that wanted to be able to see it but couldn't be on the call today, I will send that link out to everyone once I've kind of cleaned it up a little bit and finalized it. But otherwise, I am happy to introduce Ms. Katie LeJong with Landmark CPA. She is the beautiful redhead right there waving. And also want to give a shout out to Ms. Rachel McGrew. She is their business development officer, and she kind of helped us all connect to be able to do this presentation. And Rachel also sits on our Western Council, so we're thankful for both of these ladies and what they're doing for us. So Miss Katie, whenever you are ready, I'll let you tell a little bit about yourself, and then you can dive right on in.
Well, thank you. So I feel like I have lived in the PPP world for now a handful of months. So we can go over, I'm going to go over the most recent changes. And then if we need to get into any of the more core ideas and areas, just let me know. And like Megan said, drop some questions in the box. If we didn't visit on something long enough, we can go back over it or whatever we need to do. So, just a little about myself. I'm with Landmark CPAs. We have office. I'm in the Fort Smith office. We have offices here and in Little Rock, Russellville, and in Rogers. So we put together, when the CARES Act came out, and actually before that, when the FFCRA came out, we put together an internal task force. And there's 6 or 7 of us that have lived and breathed and read more legislation and feel like somebody should give me an honorary law degree somewhere. So, this is something that we know pretty well and we're getting into, and there's a lot of things we know and there's a lot of things we don't know. And so we'll go through some of those points. So the big news is, I guess, that as of last night, the SBA and the Treasury released an updated forgiveness application and updated IFRs. So you gotta love an IFR. It stands for interim final rules. So they issue their guidance. This is the 19th that's been issued, and it relays and includes the PPP Flexibility Act. So the Flexibility Act was passed later this month by Congress to allow additional time in that covered period. So where we started was you could apply for PPP money and get a loan, and a portion of that loan is eligible for forgiveness if you follow the guidelines and the rules. Of course, we didn't have those when you applied for your PPP loan. They've come out since then, and they continue to change on a regular basis. So the Flexibility Act changed some of those rules to allow for additional amounts to be forgiven. Originally, the amounts that were forgiven were in your 8-week covered period, and the covered period begins on the day you deposited the money. So that's day one, and then you get 56 days to spend that money to be forgivable. So the Flexibility Act changed the 8 weeks to be 24 weeks to allow for more time for that amounts to get spent so that they can be forgiven. So across the board, that relieves a lot of the issues that we were seeing on businesses that were not going to be able to get all of that money forgiven. So having the additional weeks does make a big difference and allows you to spend it on more payroll cost. One of the things I have to remind myself is here in Arkansas, we did not shut down like the rest of the country did. So there's a lot of places where they may have received PPP money, but they haven't been able to utilize it because they're not fully open yet. And it might be weeks and months before they are open. So where we really needed 2 to 4 more weeks to get a lot of this money all taken care of, not necessarily 24 weeks. There are other places in the country that really are going to need those 24 weeks. So you do have the ability to elect the 8-week covered period. So the Flexibility Act actually replaced 8 weeks with 24 weeks in the law. So the rule now is 24 weeks by default, but you can elect, if you had already received your money, to utilize the 8 weeks. We're seeing this be the case if you were able to spend that money on the appropriate payroll amounts, and you are anticipating some future changes, that you want to make sure that you go ahead and apply for that forgiveness now. One of the things that we do not know, and it doesn't seem to be included in the information that was released last night, is when you can actually apply for forgiveness. The original legislation noted the 8-week covered period, but then said you could begin applying at week 7. We don't know at this point if even with the 24 weeks, if there's going to be a period in time where you can apply early. We hope that that's the case. I don't think the banks or the accountants want, everybody's 24 weeks coming up at the same time, but we'll have to see what that means and how that affects the different FTE calculations. If we're looking at full-time equivalents for the covered period, you would think you would have to be outside of the covered period to be able to apply. Hopefully there's a point in time there that we have the ability to make a cutoff and go ahead and apply early. So one of the other things the Flexibility Act adjusted or added was the amount that had to be used for payroll expenses. So the amount of your forgivable portion has to be used 60% for payroll cost, or as payroll cost as defined in the legislation. If you remember, the 75-25 of what it was actually wasn't in the legislation anywhere. It was an addition that the SBA and the Treasury added in one of their IFRs. And so now it is now written in the legislation with the Flexibility Act. When it was written incorrectly, and it created a cliff. It said that if you did not spend 60% on payroll, you would get none forgiven. SBA and Treasury has come out pretty quickly and said that's not the case. They're still going to allow partial forgiveness. So last night they released the revised PPP forgiveness application, and they also released an EZ form. So for businesses that really had no change in number of employees, they did not reduce any employee hours, or they did not reduce any employees' wages or hourly rates by more than 25%, can utilize the EZ application. And that application just removes the calculations related to the reduction in wages and the reduction in FTEs. So there is a certification that's added to that that says I qualify to be able to utilize this EZ application. So that is something else that's been added now, that there's a shorter application that might be able to assist in that process. So that is one thing. The other thing that has come out with this application that, in our opinion, will have to be corrected is the way the application reads. It cuts off your forgiveness at 60% of the payroll cost. And that's just, we believe it's just the terminology in the application. It says the lesser of lines 8, 9, or 10. Line 10's intent is to make sure that your forgivable amount is at least 60% of payroll costs. So we don't believe it is truly what is intended to be included in the application. We've talked to a couple banks this morning. They're reaching out to SBA and getting that clarified so that that will be adjusted. We expect additional revisions in the application for that part of it.
Hey, Katie?
Yes.
Real quick, had a question sent in to me, and it's backtracking just a little bit, but It says, so is it either 8 weeks or 24 weeks to spend? Is there any in between, like 10 or 12 weeks?
Yeah, we don't know that yet. So right now the covered period is defined as 24 weeks. If they will allow you to cut that off early and apply for forgiveness that say 16 weeks, that has not been clarified. Okay. The process of application and how it'll go through the system is the information we have on that is limited. What we know is the application goes to your banker. Your banker has 60 days to make a decision based on what SBA guidance is out there. And then at that point, you know, the SBA has 90 days to then pay the bank. And at that, you know, that's about all we know about the process, except for having these applications. And I anticipate those will be changed, you know, every so often as they come up with new changes. One thing to keep in mind is there's actually quite a bit of legislation out there still that will make changes to the program. So in addition to SBA and Treasury's interpretation, this legislation might change what's eligible and what's not eligible for forgiveness or for the application. There's legislation out there right now to affect how it is taxed. So the original legislation stated that the forgiveness of the loan is non-taxable. Typically, when you have a loan forgiven, you'd expect to pay income tax on that. The PPP loan forgiveness is non-taxable, but the IRS has come out based on a section in their code that says if you have non-taxable income, any expenses you use on that are non-deductible. Therefore, you're pulling out the income and you're pulling out the expense. You're not getting the added deduction for those expenses. That was not Congress's intent. So there's legislation out there right now to exempt those expenses from that treatment. And we'll have to see if that comes through. One of the other big pushes that Congress has had is related to, you know, this easy application and making it simpler for a lot of the small businesses to apply. So that's an aspect of it. If small businesses will qualify for the easy application. And again, I've heard there's talk about allowing businesses to apply for more money. The second wave of PPP money that comes out there, there's still a substantial amount of money. Some businesses have waited to apply until they could open, until they understood what the process is. But at the same time, there's some talk out there about allowing businesses to go back and make a second application. That is allowed for certain businesses, and if you were a partnership, structured as a partnership, because of the timing of the rules. So when they came out and determined who could apply as a self-employed individual and who could apply as a company with employees, the rules came out later that said a partner in a partnership who's considered self-employed should have applied with the company that they had their employees with. And they did allow for those type of entities to go back and apply for more money. So whether or not they'll open it back up for another round, we'll have to wait and see. I've heard that it's going to be very targeted to different industries and different types of companies. I think they'll look at lowering the limit. Is it going to be those that might have 100 employees instead of 500 employees? So there's a lot of different chatter out there about what that might be. But there's definitely a lot of legislation out there right now that'll change. And so you have to check in and find out what's applicable to that point in time. So waiting to see some of those things. Another change that came with the Flexibility Act is how long you had, if you did not apply for forgiveness, to pay back the loan. And they changed it from 2 years to a minimum of 5 years. And that is on new applications. So if you had already applied and had received your PPP money, then you would have to work with the bank at the point in time that you determined what was forgiven and not forgiven to find out if an amount had to be paid back and what time frame that would be over. I don't know if the banks will restructure some of their loan agreements to be over the 5 years in those situations. My guess is a bank isn't going to want to hold a 1% loan for very long. So they'll make their adjustments and then probably sell off some of those loans. And you know, it's amazing because the banks are getting as much guidance as we are on a daily basis. They're not getting anything behind the scenes that's not published out there and that's not probably, you know, late already. So helping them keep up with it. One of the other changes in the Flexibility Act was related to the ability of a company to defer paying their employer portion of their payroll taxes. Originally in the CARES Act, it was noted that you could not do both. You could not have PPP funds and you could not defer the payment of your payroll taxes. So the Flexibility Act specifically said that you could do both. I would caution you for doing that. I would make sure that you definitely will have the ability to repay that amount when it does become due. If you're considering deferring your payroll taxes, it's never good to owe the IRS. So keep that in mind. If you have the ability to go ahead and get those taxes paid, by all means do that. But know that that is available to you now that you have PPP money to be able to go ahead and defer those payroll taxes if you need to. So those are some of the highlights of the changes that came through from the Flexibility Act. So the next thing I want to mention is you know, some of the fine print that gets missed. And so one of the things that I see being an issue that came out to some degree with the original application when it was released on May 15th, and then supported with the IFR, the rules for the application were released on the 22nd. And it's talking about owner's compensation. So there's a limit that was placed on that point in time for owner's compensation to be the lesser of the $100,000 annual cap. So at that point, it was 8 weeks of the $100,000, or the $15,385 was the maximum amount for any individual, an employee, but the owner is limited to the lesser of that cap or 8 weeks of their 2019 compensation. So regardless of what an owner was paying themselves during 2020, it's limited to the amount of compensation they had in 2019. Now, the application that was released yesterday, you know, our thoughts were they're going to adjust that to be 24 50-seconds instead of 8 50-seconds to be for the 24 weeks. But the application that came out yesterday is the lesser of 2.5 months of the $100,000 or 2.5 months of the 2019 compensation. So the 2.5 months is what you were able to borrow. So the maximum amount of your PPP borrowing was limited to 2.5 months of 2019 payroll. So in that sense, they've capped the owner's compensation at the lesser of those amounts. So what is owner's compensation is different based on the different entity structures. So if you're a self-employed individual and you file a Schedule C, owner's compensation is a percentage of Schedule C net income. If you are a partnership, owner's compensation is based on your self-employment income, which is on your K-1. As in what they call owner-employee, which is not defined anywhere. This is a term that shows up on the original application for forgiveness as an owner-employee, but we're interpreting that to be an S Corp or a C Corp owner. It's going to be an owner that gets a W-2. So that individual's compensation is based on their W-2 wages, but they also get to include the health insurance and the retirement benefits to the owner. However, those benefits are included in the cap. So whereas an employee of a company, you get to use my cash compensation up to the $100,000 annually, or the $15,385, and then you get to add on top of that health insurance benefits and retirement benefits. For an owner, for an owner employee, those amounts are included in the amount that's subject to the cap. For a partner or a Schedule C filer, you do not get to add those items on top of the Schedule C income. So those amounts are not deducted out of your self-employment income because they're located elsewhere on the tax return, but you don't get to add those in addition to the compensation calculations. One of the things that we realize is the instructions for how much a company could borrow. As they came out, many people realized that I borrowed something different than I was supposed to. A lot of times they excluded something or included something that may or may not have been eligible. And I think what's going to hit us is when we look at the forgiveness applications, it's going to be based on what we should have done as eligible for forgiveness. And we're going to have to watch that even if we borrowed more than what we should have based on one of the calculations, that money might not be forgiven in the end, now that we have more information on what was supposed to have been eligible. So just a couple of things there to keep in mind, and definitely work through the numbers to know where you stand. Where I feel that a lot of our companies can easily spend over 24 weeks the amount that they need to spend on payroll. If you're an owner-employed company, you might hit some limitations based on 2019 that you weren't anticipating before the application was released. That's where I think it's going to get tricky. And based on that, what we're recommending is, as you were trying to fit as much as you could in this 8-week period, and we were all about the end of our 8-week period already, now that I might want to reallocate what I was using my PPP money for on paper all to payroll cost, for the simplicity of it. I'm just going to run it through payroll cost. Maybe I can exclude the owner out of that and show that I can get 100% forgiven. And so that's a consideration. And we'll just have to see how that works. Another catch that we're seeing related to companies filing for the forgiveness before the 24-week period is up is the requirement that a Form 941 or your quarterly payroll tax reports would be submitted with your forgiveness application. As you guys know, those won't necessarily be done until the middle of October for the third quarter, and depending on when your covered period goes through or your forgiveness calculations go through, you might need a 941. You might have to wait until that 941 is prepared in order to be able to complete the forgiveness application. Hopefully they'll come out with more instructions on that. If there's a partial one, if it can be turned in later, what the options are related to waiting on that forgiveness, because you're waiting on your quarterly payroll tax reports. So hopefully that'll ease up a bit. The other thing that I see that might be tricky for a lot of businesses in having 100% of the money forgiven is the treatment of the EIDL advance. So if you also received an EIDL loan advance, the amount that the SBA will pay the bank back for will be reduced by the amount of the advance. So therefore, you'll have up to that $10,000 that's not forgiven as a part of that loan. And then you've got this loan out there for $10,000 plus the accrued proportionate interest on that, and have to decide how that, if you just want to get that paid off or what it is. A lot of your actual loan documents will dictate certain things. They will note that the loan application must be applied for, forgiveness must be applied for within a certain time frame, what's going to happen to the loan after the fact. I've even heard that if an amount is not forgiven, it's intended to be due on demand and due at that point, or subject to different types of refinancing. So be sure to read the fine print on your loan documentations. It might dictate when they want the application submitted by, if forgiveness is going to be done. So those are just things to pay attention to. A lot of banks just use the SBA forms. Some of them added their own forms on top of it. So just take a look at those forms to make sure that you understand all the terms. Okay, so those are some of the things that I see catching people, catching some of these businesses and maybe not having 100% of everything forgiven, is that owner's comp and that treatment of the EIDL advance. So those are things to watch out for and be prepared for. A couple other aspects that have changed with both the Flexibility Act and with the forms that came out last night was added exceptions related to your FTE count, your full-time equivalent account. So the guidance says that you're going to look at an employee's per paycheck hours, and then you're going to average that. So if you had some people hired and they weren't working full for the full time frame, you're going to have something less than an average of 40 hours a week. And therefore you divide that by 40, you're going to get something less than 1.0. So the idea is not all of the employees that left because you did not offer them a job. So if you had somebody leave and go to unemployment and then you offered them a job back and they refused, that idea is that's not the business's fault, and they don't want to reduce the amount of forgiveness because of that. So they originally had some stipulations on that said you had to offer the job back in writing, you had to document that they refused the offer, and then you had to submit them to state unemployment so that they would know that they had received an offer of an employment. So those are things I would make sure you've documented. The applications also have noted that, you know, if an employee left voluntarily, if they reduced their hours voluntarily, if, you know, you're comparing to your look back periods and somebody left because they took a job out of state or some other reason than COVID related, you can, you know, you don't exclude them, but you're not reducing your percentage by that time. So when you're looking at your FTE calculations, there's quite a few calculations you would go through to determine how to apply that. So some of the basics on the FTE pieces is you're comparing your covered period to an option of one of two look back periods. So you can compare them to February 15th of 2019 through June 30th. So you're looking back into 2019, or you can compare them to January and February of 2020. And they've given you the option because there were different parts in the legislation that said different things. So they gave the company the option of whatever was more advantageous. If that doesn't work, there's a safe harbor. And the safe harbor says that if you had a reduction in FTEs from February 15th through April 26th, and you restored it by 6/30, which is now 12/31, then you do not have to reduce the amount of your loan forgiveness. So I have interpreted restore by being the time frame that you actually apply for forgiveness. So if we wait the 24 weeks, but we apply in the end of October and I've restored it, but I didn't have to go all the way to December 31st to prove that I've restored it at 12/31. There's no guidance out on that yet, what that means, but for the most part, that's the way we're interpreting that, is you don't necessarily have to wait to December 31st if you've restored it by then. And that's the examples there. Yep. Megan, you're muted.
Sorry, I forgot I did that out of respect for you. A couple questions sent in. One is, from an accountant's perspective, when is the PPP loan considered forgiven, i.e. moving from a liability to equity, and then when the bank approves it or when the government funds it? And that one's in the public chat if you need to reread it. But
right. So, you know, the bank approves it, but it still has to be approved by the SBA. So I don't know that you have to wait until the SBA actually pays the bank back, but I would definitely wait till the bank actually provides you with the support that says this loan has been forgiven, which they're not going to do until the SBA approves it. So there'll be some process there between when the bank says, I think you're good, I'm going to submit this to the SBA, and then when they get it approved. Hopefully we don't have to wait on them to get paid. It says they're supposed to be paid in 90 days, but the banks are actually just now starting to get the fees that were attached to these forms since April 3rd. So there's definitely been a delay in the banks getting paid for a lot of these pieces. So it's going to be somewhere in that magic area around the 60 days, and it might just be a little longer until the SBA approves it. I say that for those who have borrowed under 2 million. Those that are over the 2 million will be subject to SBA's review. And so that might take a little longer before that is going to change. And I would anticipate that to be probably 2 to 3 years. So, I mean, by the time that covered period ends and you go through that process, that's going to be quite a time period. I want to mention too that the 2 million mark is for all companies, all affiliated companies. So if you are owners in different companies that received individual PPP loans for each company, you add all that together to get to your $2 million. So keep that in mind when you're looking at affiliation rules. And they've submitted quite a bit of guidance out on affiliation rules as far as how you're looking at that $2 million.
Okay, all right. Thank you for that. And then I had one other question come in, and it's a little switching gears here, but so if a company only had a couple of circumstances where a job site had to shut down for precautionary reasons, would they still be able to apply for forgiveness? And if I need to read that again, I can.
Okay. Well, I don't know that it's going to be tied to a specific to your work. I mean, I think it's going to be based on whether you kept paying people. As long as you kept paying the wages of your employees, and honestly, it's if they work or not. I mean, the idea behind the PPP money is I'm going to give you money that even though you're not making money, you're still going to pay your people. So, the idea is you keep them on the payroll regardless of if they work or not. And so your complications came in because, it's halfway through your 8-week period before are you going to run out of money before your 8 weeks is up, and you're going to have to send them to unemployment anyway. And there's a lot of places that was the case. So people hesitated borrowing the money for that purpose or using it for that purpose. I've talked to some companies that say, until I'm sure I'm going to be able to get part of it forgiven, I'm not spending it. So, I mean, they're just kind of holding on to it to wait and see.
Okay.
So now with the 24 weeks, that becomes a lot more doable for whatever they borrowed to be able to spend it all on payroll and not adjust. But I mean, your workload shouldn't factor into it as long as you kept paying the people. And so if you haven't started that yet, if you were waiting and you went ahead and sent them to unemployment, and you can bring them back and spend that money in the next 14 weeks or whatever's left in your 24-week period, you're still eligible to have that amount forgiven.
Okay.
So that's a big piece of it.
I want to back up a
minute. I want to back up just a minute because I forgot to mention something when we were talking about owner's compensation. And I was reminded of it. So the owner's compensation, when you look at limiting it to 2019 and limiting it to the 2.5 months of the $100,000 annually, that is across all companies. So now you're looking at the affiliations and the owner got paid from what companies, or they can't borrow up to 100,000 on company A and 100,000 on company B. It's going to be limited to the portion of the 2.5 months of the 100,000 for all companies. And I know there are applications out there where you applied for it under each company because you were paid. That was in your payroll for 2019, and that's what we knew at that time. So that's another thing that's going to is going to create a hiccup in those companies where there aren't other employees. Because now I can spend that money on other employee payroll for a longer period of time. But for that owner-only company that may have borrowed on it, we just don't have that information back I mean, we just aren't going to be able to do it. We got to apply it through all companies. So that's another aspect of that. One of the things that was clarified with the forgiveness application and did not change with this application was the idea that the expenses, both payroll cost and non-payroll cost, could be paid in the covered period or could be incurred in the covered period and paid by their normal date. So when you were looking at that shorter time frame, you were trying to say, you know, March rent I hadn't paid yet, but I paid it when I got my money in mid-April, and I paid April's rent. Both of those amounts would have been eligible for forgiveness. And then when I looked going forward, if my covered period date ended 2 weeks into a month, I got to count that 2 weeks, even if I paid it later when it was normally due. So there was the ability to take that 8-week covered period and get more than 8 weeks of expenses in that period. Those are the companies that have been able to stretch that, depending on when their payroll dates are the ones that are looking at going ahead and applying under the 8-week rules. But it still has to be at least the 60% in payroll cost in that situation. We've had the question from the beginning how the treatment of self-rented property would be considered. When you look at rent expense, is it the fact that I rent it from a company that I own, is that going to be eligible for rent, or am I going to have to limit that to mortgage interest? The IRS has all kinds of wonderful rules on those self-rental properties, and there's been no mention or clarification of that at all. So right now, applications are going forward just rent, regardless of who it is, as long as you can show that the rent was in force on February 15th. Does that mean you have to have a written rental agreement? Well, that would probably be best. But I don't know about the legal definition of enforce, but I'm sure if you've been making payments for 5 years, you can probably show that your payment history shows that lease was enforced from that point forward. Just same as utilities, you have to provide support to show that those utilities were in place at February 15th or pre-COVID. You didn't go out and get new space because of your PPP money. So they want to make sure that that was handled appropriately. But the idea of it being paid or incurred instead of paid and incurred opened up quite a bit to allow for more money to be spent in that covered period. So that was a big benefit that came out back then for the borrowers. They definitely have made a push, and Congress especially, to make as much of this forgivable as possible. And we all know the banks are going to want to forgive as much as possible. So that's a big piece of it. A couple other things to notice on the application is if you are looking at both a wage reduction for employees and an hourly reduction, is you don't have to apply that twice. You're not going to get a double whammy for both of those. You apply the wage reduction first, and you're looking at any reduction that's greater than 25% of what they were making. So you're looking at either that hourly rate or that salary amount that was reduced. You only reduce your forgiveness amount for the amount that's over the 25%. So the first 25% of that reduction is free and clear. If you reduced their wages by 35%, you're only looking at the 10% amount that would reduce the forgiveness amount. And that is a dollar amount. It's not a percent amount. So if that person's salary was reduced, you might, it would reduce it dollar for dollar off your forgivable amount. So that's one aspect. Now, if their wages were reduced because their hours were reduced, that's not a wage reduction. That's an FTE reduction. You're not going to take both of those reductions. You only take it once. So at that point, if their hours were reduced, you go through the FTE calculations to see if you can restore them or if that was fixed or excluded, and then you can look at just applying that percentage. That one is applied as a percentage. If you're looking at, overall wages were reduced by 90%, you're going to apply 90%. So that piece of it comes last. So that's another thing. All right, you guys tell me what you're looking at that brings you questions and surprises, because we can just continue to talk through the application, but I want to make sure I'm addressing specifics if there are any.
You guys feel free to type in the chat box. I mean, just knock them out one at a time, or as you think of them. People have been messaging me privately or publicly. Either way, I'm happy to not read the person's name if you don't want everybody to know it was your question. So, or Katie, and if no one has any specifics in the next, few seconds, I know you can continue talking about the application, but if there's, something that a lot of people have messed up on, or you see a lot of common errors in one particular area, or if you see a lot of things that are done well, or, this part's easy, this part's not.
Well, that's what I wanted to start with, was making sure I address the things that I think are going to catch most people. Just as far as that goes. I mean, even on the application, if you had 5 people on your staff, and you've always had 5 people on your staff, and they worked or got paid for their 40 hours just like they always did, then you actually don't have to go through the FTE calculations. You don't have to go through every covered period. The SBA uses a different definition for number of employees versus FTEs, or full-time equivalents. So the application has a part that says if your number of employees did not change and you did not reduce their hours, then you can basically skip the FTE calculations. So it's similar to the easy form that, so it's kind of odd, because the easy form pretty much did the same thing as just being able to check that box and exclude that. If you you had 2 weeks where you had a little downtime and people were not working as much, then you're going to have to go through the actual calculations for the covered period. The application has 2 different tables included, and I hope they have some clarification for this, because the first table discusses if you had $100,000 or more annually in salary in all of your payrolls. And then table 2 talks about if you had the equivalent of $100,000 annually in any payroll. So if you gave bonuses at the end of the year, and those bonuses could have been extrapolated to be more than $100,000 instead of their actual salary, do you have to put somebody in both tables? That doesn't make sense to me. I don't know why you would do that. So I don't anticipate that being the case. But we'll hopefully they'll come out with additional clarification on that. If you're in that second table and you made over the $100,000, you're not included in the FTE calculations. Owners are not included in the FTE calculations. They go on a separate place on the application. So there's not anything that if an owner reduced their salaries, that's not something they're worried about. So that's not going to reduce any of your actual forgiveness amount. So that's a piece of it. But those, like I said, once you've cut somebody's hours back in, you're going to have to go through the process of calculating those FTEs and just pulling that from your payroll. I would tell you to make it as easy as possible on the bank. As accountants like to tick and tie things and make sure numbers match and provide connections. So if you're looking at your weekly or bi-weekly payroll report, you're going to have to back out the owner's wages on that. You're going to have to back out those employees that made over the $100,000 amount. You're going to have to include here's what I paid this month for health care, but I need to back out the owner's portion of that because theirs is treated differently. Add some schedules and some tapes to be able to allow the banker to be able to tie to those numbers all the way through to your schedule. And your spreadsheet that shows here's everything I spent with my PPP money. Like I said, it'd be great if you can use it all on payroll in the 24-week period, then just look at your payroll reports and that's about all you have to do. If you need any kind of help tying those things, we've got some spreadsheets that we've got set up that are easy ways to show, here's my summary, here's the reconciliation to get to the number that's on the bank's forgiveness calculation. A lot of the banks have come out with their own spreadsheets that they're going to want used in their own tabulations in addition to this application. So of course they're all making changes right now because we just extended the period and made a change. So you'll want to see what they want, or if they can just use your schedule. If you just have a list of all of the expenses, you know, go ahead and show where all those numbers on your application come from to make it just as easy as can be for the banker. You know, document that this person left because of this. So we've not included him. We've included him as a 1.0 instead of a 0.5 for the period. Some of those kind of things to make sure that you've made that process as easy as possible. Just keep those things in mind as far as that goes. You know, they had made the ability to match up your payroll cost with your typical payroll cycle. If you were biweekly or more frequent in paying payroll, you could choose this alternative covered period for payroll related costs. Originally, my thought was you don't want to do that because I can fit 10 weeks of payroll into 8 weeks, possibly if I needed to, depending on the dates when it was an 8-week covered period. But now that you're looking at 24 weeks, maybe you adjust. That way it's cleaner in what you're providing to the bank. You just have to look at your numbers and make sure everything still works in that regard. So that's, you know, the option of that alternative payroll covered period. For a while there, we thought we were going to be doing cutoff payrolls on that last day of the covered period for hundreds and hundreds of folks to get it all in that 8-week period if it had to be both paid and incurred. So they alleviated that piece of it in that instant. So that's a piece of it. What's eligible for forgiveness does not include the employer portion of the taxes. It includes the employee wages at gross, but you don't add to that the employer portion. So you can't just take your 941 deposit and include that amount with your forgiveness. You're going to have to look at your payroll summaries and make sure you're picking up gross wages. You do get to add the SUTA tax, the state unemployment tax in there, but not the employer portion of the Social Security and Medicare. That doesn't get added on top of that. So keep those things in mind, and that's why a great schedule to reconcile that to from your payroll summary to the number you put on your spreadsheet would be very helpful to the banker. And then one of the other things that the application and the IFR specifically made note of is that bonuses were allowed. So that for those of you that thought you were at the end of your 8-week period, so you were paying out bonuses to make sure you make the 75%, and you got everything used and forgiven, those bonuses are allowed. I would imagine those bonuses are allowed in both cash and retirement spending, as long as it's within the limits that are the caps per employee and those owner limits. That would be bonuses are specifically eligible, or they've even used the term hazard pay, that you were working when other people were not working. Another aspect to keep in mind is that if you did apply for the FFCRA credits, so if you had anyone on the expanded FMLA or take the emergency sick pay, and you're getting those credits on this next 941 application, then those salary amounts are not eligible for forgiveness. So if you are using both of those programs, you're going to have to back out the wages that are related to those FFCRA credits. So keep that in mind in your reconciliation process. Again, the 24 weeks is going to help because you may have had 2 weeks worth of emergency sick pay, you get that credit, but now you can use your PPP money for the following weeks after that. So that's a benefit. In addition to the PPP portion of the CARES Act, there's a lot more in there. So be sure to visit with your accountant if you've had previous losses or any loss limitations in the past couple years. It's made it the ability to carry back some of those losses. Certain aspects of that are better if they're done before June 30th. So that's a piece of it. If you've done any of the completed contract program projects that you own, and you were looking at bonus depreciation, and you were told you couldn't take that because of the technical glitch in the tax act that came out a couple years ago and applied in 18, they've gone back and fixed that. So you might look at amending some of those 18 returns if you had some of those additional costs and being able to get a refund back on the money you paid in. So those are items for those projects. And you guys are going to know lots of clients, lots of your customers that may not have been able to take some of those expenses last year, but could go ahead and amend that return to accelerate that depreciation into last year and get back whatever they paid in, or a portion of what they paid in. So there's a lot of little nuggets in that CARES Act that are beyond PPP. And if you're listening at all, the HEROES Act, which is now in the Senate out of the House, is, well, it's 1,865 pages when it went into the Senate. The CARES Act was only 860. So it's going to be full of who knows what by the time it comes out of the Senate. So that's just one more thing to look forward to in this next round. It's anticipated to have a lot of stuff in it that is geared towards the hospitality industry, who's been hit significantly hard. So there might be projects that you guys have put on hold that you'll eventually get to pick back up, because we're all going to go get paid to go eat places now, I think. So that'll be a benefit. So there's just a lot more to come down the pipeline. In addition to what we expect with the PPP money, I think we're going to get hit with all kinds of different pieces that come through. Additionally, you're paying attention to what's happening at the state level. The Ready for Business grant, if you've been able to tap into the Ready for Business grant, be creative with what you're using that money for. I think there'll be a lot of eligibility to make your place of business more user-friendly and follow those social distancing guidelines. There's not a lot of information out on that other than what they've published, but again, we can reach out if there's anything you have a question on. So, and then, just go ahead and I know the 24 weeks has given us a lot of comfort, but make sure that you are planning for it. So go ahead and budget for that owner compensation limitation. If you're going to hit any of the other limitations, build your file as you go. Go ahead and put it together so that you have it ready and you have comfort. You might have to make changes down the road, but at least you'll know that it's all put together and have a little peace of mind where that's considered. So guys, what other areas are you seeing that are questions? Anything that we talked about that you didn't know or need more information on?
So far, the chat box is quiet.
The other one that I hear a lot is the idea that everybody's wanting to include gasoline or mileage. That's only mentioned in the instances where you file a Schedule C. So that's not going to count as utilities. I know transportation is listed as a utility, but I believe that's intended for those larger metro areas where they have a transportation charge in some of their utility bills. So that you're not going to get to count your gasoline and your forgivable amount. I've seen that one tried a couple times. So that one's, well, I'm the bearer of bad news. That one's not going to be allowed. So.
I see Rachel just mentioned to everybody in the chat that you guys do send out regular updates via email. So if anybody wants to sign up for Landmark's email list and kind of stay up to date with what they're learning, you can email Rachel. And they also have a COVID resource page, as does ABC. And I think their page is listed on our page. So there's a couple different ways that you can track that down. And anybody on the call that ever has resources they want to share, just let me know. This is what we're here for, to share these best practices and new information. So bring it on.
Right. So, I mean, like I said, the new information that's out today is the additional application, the revised application. they came out on, I guess it was last Thursday, with a revised application to borrow money and updated for the Flexibility Act on that. We are still anticipating there to be some FAQs released by the SBA to provide additional clarification. We thought that those would drop right before the Flexibility Act was passed, and I think they held them to be able to wait and see if they were going to have to revise. So anticipating those probably in the next week or so to get some additional clarification on some of these pieces and amounts. But like I said, it's given us all a lot more room with the 24 weeks to be able to make sure that we can get that amount forgiven. And it sure seems like it's the intent of Congress to be able to allow for that forgiveness. So you just want to watch your FTEs to make sure that is going to be the case. You're going to be able to get that amount forgiven. Your owner's compensation, watch out for that EIDL advance, and just run the numbers. Run the numbers and make sure you're good. That's what we spend a lot of our time doing is, seeing where people stand, what they need to do to get that spent, and make sure that they've got all their T's crossed and I's dotted when it comes down to that. Talk to your banker, talk to them frequently, make sure you're on the same page with them and see what they are going to want and what they're not going to want. They've been given a lot of, room to, look at those applications. And like I said, some are waiting for guidance. Some are ready for you to submit that application as soon as you can. We just don't know if we're going to be able to apply for forgiveness early yet or not. And that'll be the key factor, and what those FTEs are going to look like at that point in time, if you can go ahead and calculate that, or if you're going to need to wait. But have a rolling, every payroll, go ahead and add in your FTE calculations so that you're up to date at that point in time and know where you stand. That's the hard part, is we can only use the information we have at the current moment, and it changes about once a week. So
lucky you.
ongoing crazy.
Absolutely.
So, mm-hmm.
Everyone that's on the call, this is your last chance while we have Katie live here to type in your questions. Type now or forever hold your peace. All right. Well, but again, if you guys do have some follow-up questions or need some clarification, you're welcome to email me or Rachel, because I know she put her email in there too, and she can get that to Katie. But we're here to be a resource and to kind of connect you with people much smarter than I to help you through this. So anybody, last minute?
Hey, thanks, Katie. That was very informative.
But I'm hoping it helps. I mean, I'm trying to hit the highlights and not go back through all of the details, because I mean, you've known that for a while now. But like I said, it changes just constantly. So we could do another one of these in 2 weeks, and I'm sure that morning they'll release something. The information they released last night, and if you've tracked it like I have, they release it at about 8:30 or 9 o'clock the night before, so that they can date it that day, but you don't actually see it till the next day. But it's actually scheduled to be released on Friday night at 8:30, which is their normal release date. So somehow it got released a little early. So.
Oh, something happened early with the government.
Late, but early. So yeah.
Well, any last minute words of wisdom or thoughts?
No, just like I said, just plan ahead and go ahead and build your file and do what you can. Know if you're going to be over that $2 million mark between all your companies. I mean, we've got several clients in that position. There's going to be a longer process for you. But just keep paying attention and sign up for the emails so that you get the information. Mm-hmm.
All right. Well, I know
I can help specifically with anything.
Wonderful. Well, I know a few people joined the call late. So again, this was Katie LeJong with Landmark CPA, and their office is in Fort Smith, but they have locations in Little Rock and other areas. So they I don't know if they're fully statewide, but I think they can help anybody in Arkansas, and they love helping ABC. They're wonderful ABC members. So they're a valuable resource. So Katie, again, thank you so much for your time today. Everybody that's on the call, appreciate you taking the time to learn and make sure you're keeping your company safe and in compliance. And so all your employees and your employers are protected. So with that, I guess we will dismiss for the afternoon. I hope you all have a fantastic day. And if any of our Fort Smith folks are on the call and are going to be golfing on Friday, we'll see you at the Fort Smith Golf Tournament this Friday at Ben Guerin. But otherwise, have a marvelous rest of your week, and we'll see you on the next Zoom call. Thanks, everyone.